Hi, this is Suresh Kumar. I started this channel for those who interested in stock market and to make money. In this channel, I am going to discuss about what is stock market. In stock market, you do not need too much of money to trade in stock market. Unlike other business, you have lot of money to run a business. But in stock market, you don't have too much of money because stock market is a place the stocks are trading from rupees 1 to 50,000. Stocks are available in stock market. Shares are available in stock market. You are selecting 1 rupee shares to 50,000 rupees shares. That's why you don't have too much of money to trade in stocks. The share market is a place which provides many opportunities for individuals to grow their wealth and build savings. It is a place where company shares are bought and sold. By issuing shares to investors, the company in question aims to collect funds for its business needs. When investors purchase these shares, they become part owner of the company and may often receive dividends. Of course, this is only the short version. If you are keen to invest or trade in the share market, you must understand the nonsense of how it works. Read along to become familiar with how share markets function and why they are important, and how to invest and trade in the share market. How do share markets work? The share market can be divided into two parts. The one is primary market, the another one is secondary market. Let's see primary share market. When a company decides to go public and list on the stock exchange, it issues shares to the public through an initial public offering, told as IPO. This IPO takes place in what is called the primary market. Investors can apply for these newly issued shares through their trading account or via their bank account. Once the subscription period ends, the company allots the shares to the subscribers. Soon after, the newly formed company lists on the stock exchange and shareholders can sell their shares in the secondary market. In India, there are two main exchanges. The one is Bombay Stock Exchange and the another one is National Stock Exchange. What is meant by secondary share market? In the secondary share market, the traders can buy and sell stocks that are listed on the exchange. Here, the prices of the listed shares change based on fluctuations in demand and supply. If the demand among buyers goes up while sellers are few, the share price is likely to rise. On the other hand, if many sellers are trying to exit their shares but buyers are limited, the stock price could fall. But as there is a huge number of traders on the market at any given time, finding the best trades can be tough. Here the broker plays a key role in helping buyers to find sellers and sellers to find buyers. The buyers in the market state their bid price. This is the highest price they are willing to pay to purchase the stocks. The sellers in the market mention the ask price. This is the price at which they are ready to sell their securities. The difference between the bid price and the ask price is known as the spread. Importance of share market. The share market offers businesses an opportunity to raise capital for their growth and expansion. Investors who wish to become a part of the company's growth story can participate by purchasing its shares. Traders, most of whom purchase shares for the short term, could earn profit based on shares price fluctuations in the market. Thus, the share market has a hand in wealth creation at different levels of the economy. Traders and investors also benefit from the high liquidity of share investment. It is possible to liquidate. Traders and investors also benefit from the high liquidity of share investments. It is possible to liquidate shareholdings at any time. A shareholder who needs funds urgently has the option to sell their shares when the market is in session. Thus, the holdings can be converted into cash at any time. Shareholders gain from investing in the share market. Dividend income. Dividend refers to the profits that a company shares with its shareholders. It is distributed based on the number of shares held by each investor. While not all companies pay dividends, those that do are a major attraction for long-term investors. Capital growth. Many investors look to earn long-term wealth, so they invest in stocks and hold on to them for years in the hope of capital appreciation. That is, a rise in the share price. If capital growth is your goal, check that the company has strong fundamentals before investing. Share buyback. At times, the company may repurchase, means buyback, its shares from the shareholders, paying slightly higher than the market value. Companies buy back shares when they have a large amount of cash in hand or want to consolidate their ownership in the company. Demat and trading account. What is meant by demat and trading accounts? To invest in shares, you will need a demat account to dematerialize your shares. You will also need a trading account to carry out the buying and selling of shares. Anytime you purchase stocks, the payment will be debited from your trading account balance and the purchased stocks will be credited to your demat accounts. Should you sell any stocks, the reverse will occur. Stocks will be debited from your demat account and any money from the sale will reach your trading account. Procedure to open demat account. Submit the relevant documents: PAN card, Aadhaar card, identity and address proofs, income proof, cancelled check, leave as bank account proof, passport sized photograph. Complete the in-person verifications. The broker will send a representative to your home. Once the formalities are complete, you will receive your client ID, a password and account details. Use the details to log into your account. Placing share market orders. As a share trader and investor in India, you can buy and sell shares on the Bombay Stock Exchange, Metropolitan Stock Exchange and the National Stock Exchange. The broker with whom you hold an account will mediate between you and the exchange. There are two ways in which you can place your orders for share trading. The online mode and the another one is offline mode. What is meant by online order placement? Using the online mode is safe and easy. Simply log into your trading account and set up the order. You will have to mention the script name, price, number of units and other details. The broker will execute your order accordingly and the shares will be automatically credited and debited from your Demat account. Another one is what is meant by offline order placement. In the offline mode, you can instruct the broker over the phone or in person by visiting their office. The next steps are like in the online mode. All debits and credits will happen automatically. Investing in share markets. How to investing in share market? Invest only after doing thorough research and analysis. Never rely on the advice of the friends, relatives, or acquaintances, or etc. Invest in companies and sectors that you understand. That way you will be able to gauge their future prospects and growth. Don't try to time the market. No one can successfully invest at the exact bottom and sell at the exact highs. Be a disciplined investor. When required, wait patiently for the stock price to rise in the long run. Don't get influenced by emotions. Decision taken on the basis of emotions can lead to loss in the share market. Diversify your portfolio by investing across companies and sectors. This helps minimize your risk and brings good returns in the long run. Be realistic about your expectation of returns from the market. Thank you.